Okay, thank you so much for being here. And if you're watching this later, I know many of you have asked to record it. You'll be getting the link of the recording. So today's topic is all about preparing yourself for retirement and specifically preparing yourself to pass down what you've built in your working life. So today's topic, we're going to be talking about trusts, wills, and retirement. We're going to focus the first part of the phone call on wills and trusts and how to pass down what you have built within your working years and everything that you have in your name. And if you are married, if you're not married, and if you don't die, but you can't take care of your things, or you can't make decisions because of being in a hospital or being incapacitated or being in another country. And so all those topics are going to be covered today. We're going to talk real fast in order for us to be able to cover this within the half an hour. And you're going to be, if you participated on a phone call, you're going to be receiving the link. So on the Facebook page that we posted the invitation, make sure that you write there that you want the recording and we will send it to you privately on DM. So my name is Anna Farrell, and I am a financial advisor, and I live in Florida, but we act in over 7 states. I'm also a real estate agent, and my job is to help my clients organize their finances, find out what to do with their money, get out of debt, get organized, and then learn how to acquire assets and manage those assets wisely. My hope is that my clients, with our assistance, will be able to achieve all of their financial goals and in retirement be able to enjoy everything that they have built on their working years. So if you need help in that, and if you are unsure of a person that you can trust, that you feel comfortable sharing your goals and your what you want to achieve in the future, I want you to jot down our name, DM, send a private message, go to our website and ask questions. That's what we're here for. Our goal is to help you figure out what you do from point A to point B. Your point A is today, your point B is where you want to be in 5, 10, 15 years when you retire, whatever your goal is. So count on us. You can trust us and you can see from our track record of our clients that are so happy with what we have achieved. So today's topic, let's talk about will and trust. So many of you have heard about it, know a friend that has it, know a parent that has it, or even yourselves, you have a will or you have a trust, but you're unsure if this is exactly what you need in order for you to prepare for the future. So let's just dissect what is one and what is the other and what are they used for. So I try to make it super simple for my clients and saying, if you want it for you to do the planning and you want your successors or your beneficiaries to do what you want them to do and you want to pay for it, you're talking about a trust. If you want your successors and beneficiaries to do what you want, but you want them to pay for it, you create a will. And that's really the main difference. There are, of course, a lot of different points that you want to consider if a will or a trust is best for you. But whoever pays for it is going, the trust, the person that is alive will pay for it. The will, they write it down, they notarize it, they get witnesses, but who pays for the process is the people that are left behind. So if you can think about that, you can make original decision of how you want that handled. I have a lot of clients that say, my family can deal with it. I've worked really hard. Let them figure it out. And a will be just that. But if you want the next generation to not have to worry or be fighting about it or be taxed with all that process that comes along after you pass, then a trust is the best vehicle to pass down what you have accumulated. A trust will take effect immediately when you are alive. A will take effect after you pass away. So those are something else that you want to pay attention to. A will only start working after you pass away. A trust will take effect once you notarize it and it becomes effective. The difference then is in between your choices. What do you want to do with it? So the other question that I ask my clients is, do you have real estate assets? Do you have a home that you own? Do you have investment properties? Do you have a land lot that you own that is yours? Those assets are easily transferred when they're inside of a trust. If they are not in the trust, then they will go through probate. Even if you have designated on your will that you want to leave that for your beneficiaries, for your spouse or whatever, that will go through probate. I'm sorry, I'll take away the spouse. Depending of how you hold your title, it is an automatic transfer to your spouse, depending of how you hold your title. That is why you want to, when you purchase a property, you want to know how your title, how your property is titled. Because even if you are married, if the title, the way you hold your title in your property is not to be transferred to the surviving spouse, you'll have an issue with that. So make sure that you understand how your property is titled, and we'll talk about it in a little bit. But with regards to transferring the properties, real estate properties, a trust is a better option than a will, because a trust will transfer immediately to the next person in line that you designate on your trust. The will only say, I would like for so-and-so to inherit my house, but then that process of transferring the title is not immediate. It must go through a process that's called probate, that goes through the court, and then the asset will change ownership at that point. So a trust, immediate, will, probate. So those are, when I ask my clients, what do you want to do with your assets? And they give me those three information. Do you want to pay for it? Do you want to designate and have it established right now? And do you have real estate assets? Those are the three main questions. Once they tell me that information, then I can easily gear them towards one or the other. So let's talk about if you have any questions, go ahead and send it on Facebook or on chat over here on Zoom, or on Instagram if you're watching on Instagram. So if you want, let's talk about probate real quick, because probate is something that a lot of people have a lot of questions. And do I want to go through probate? Well, sometimes it doesn't matter. You're going to be, well, please forgive me when I say death, and you're going to be dead, because that's the topic for today, right? But when you're no longer here and now your family, your successors are taking care of your assets, they're going to be the ones dealing with it. Let me tell a story to illustrate what probate is. I have a client who was widowed, and he had 7 biological children. He lived in 4 different states, but the last one, he moved from Utah here to Florida. He had 2 of the 7 children were estranged, which means he had contact and he was friendly with 5 children, but 2 of them he no longer had contact. And he expressed to the 5 remaining children that he did not want to have contact with them. At one point in his life, he gave them some money and says, "This is your inheritance. We are no longer friends. I don't want to talk to you anymore." But this gentleman never put that on paper. He never left a will. All he had was a piece of paper that he wrote on Christmas Day one day, and 2 of his 5 children witnessed it. So that is all he left. He passed away unexpectedly. And at this point, he had no will, he had no trust. All he had is this paper that he expressed to 2 of the 5 children that he wanted to have inherited his properties. 9 months after he passed away, we still did not have all of his assets divided into his children. And would you know that the 2 strange children came to claim some of the assets, and they indeed received some inheritance, because he did not leave anything in writing that he said, "I don't want these children to receive it." So what happened? My client has passed away. He's no longer dealing with that. But what happened was stress and the diminishing of the assets, because he did not write everything down. So his houses, the boat, the RV that he had, and property that he had, all that was divided into 7. one child became the successor and he got burdened by all of that paperwork, proving that his dad did not owe something, proving that some people came over and said, oh, so and so needs to pay us for a debt that it was a long time ago already paid for, but now the children had to prove that that debt no longer existed. So that's what probate is. Probate is a process where the court has to show that the deceased doesn't owe anybody money. So the assets that are left over, which is called the estate, will be all bundled. We're going to dictate a successor. That person is going to make decisions and sign on behalf of the deceased. But the court doesn't know the person. It's the word of one person and the word of the other person that's going to prove that indeed that money needs to go to that person instead of the court having to prove it. So a probate is a very lengthy process, very costly process, and many times it doesn't follow what the deceased would like to happen. So strongly suggest that if you have real estate assets, to put a trust in place. It doesn't take very long, it's not very difficult, and it saves your family a lot of heartache and money when it comes time to spreading out your assets to the beneficiaries and the successors. Okay, so that's probate. If you have children and they're minors and something happens to you, and now all of a sudden your spouse starts educating and having changing behavior, but you didn't write it down, now there's nowhere to enforce it. Let's say that the grandparents want to go ahead and enforce your wishes. There's nothing that is written that can help you or that can help your parents or your siblings bring your spouse in the right direction, or at least do what you would like for it to be done. So those are the things that you're putting into these documents that are going to help you stay alive with your wishes with regards to everything that you own and that you have. Okay, so how to prepare your ask. Any questions or anything, make sure that you put that on the chat or send it on where are we? Instagram or Zoom or Facebook. So to avoid probate, you want to have, but if you only have a will and you want to avoid probate, and let's say that I don't have real estate assets, I don't own a house, I rent and I don't have a lot, and I rent my apartment, but I do have a car that's leased, or you have a bill, I have a car note, and that's all you have. So a will is sufficient for that because you have not paid off that car. And until you really have a real estate asset, a will do for you. But what are the steps that you want to take in order for you to have your power of attorney, your medical directives, and your investment accounts, your bank accounts, your credit cards? What do you do with these things? It's a simpler process if those are your assets. What you want to do is you want to check to see specifically if your bank accepts a faster turnaround in case of a passing, if it's a payable on death document, or if they would rather have a co-signer or a registered signer on your account. So your banking account, checking your savings, those types of let me see, just a second. Click the link. So if you check off with your bank, so many big box banks accept what we call a payable on death designation. You want to contact your bank and tell them, I would like to add payable on death designation for my account. And what you do is you fill out a form, you take it to the bank, and if anything happens to you, you don't have to add that person to your bank account. Your beneficiary will provide your death certificate and that payable on death designation form that is notarized, and then they'll give you access to the bank account of the deceased. So that's super easy to do. Now, with regards to investment accounts and with credit cards, you do want to have a little step, especially with investment accounts. You want to put your beneficiary as a designated beneficiary. So you can go into your account, open it up, and most of these accounts will have a beneficiary option there. So, and the reason why we say you want to have two is because sometimes the vast majority of the times you're going to choose your spouse as your beneficiary. But let's say you're traveling together and you get stuck somewhere, or both of you pass away, then what happens to this account? So you want to have a primary beneficiary, which normally is a spouse, and then the second option would be a contingent beneficiary, then a person that you trust, an adult child, a sibling, a parent, whatever. So always choose a primary beneficiary and a contingent beneficiary on your life insurance policies, on your investment accounts, on your credit cards, even on your Facebook and Instagram profiles. If you want to be able to access social media of a deceased person, that beneficiary must be named in those accounts. Otherwise, you cannot. Even social media accounts will not let another person access a deceased account. So that account will be open forever. And that happens a lot. So opening these accounts as an owner and adding a beneficiary, a primary beneficiary and a contingent beneficiary will make the life of those people that are left behind so much easier once you're gone. Or even if you're here, but you cannot make financial decisions, you know, if you're in a coma or if you're incapacitated for some reason. With regards to medical directives, we're going to be talking about that in a little bit. But if you, so that has to do, so we're talking about bank accounts, investments accounts, yeah, that part. Let's talk a little bit about transferring title that is not a real estate asset, but your car, boat, RV, motorcycle, those things. Each state is going to be a little bit different, but there's two options. One option is if your vehicle or RV or whatever it is, if that is paid for, if you hold a title to that asset, then the easiest way to do that is insert that in a trust. Or if you don't want to have a trust, you have a will, you designate that the beneficiary should be so and so. A trust or a will easily transfer title to your beneficiary. And then all you need is to go to the DMV with the certificate of death and the will or trust, and go there and pay your little fees at the DMV, and they'll transfer the title for you easily. If the RV, car, boat, whatever it is not paid for, if the lien holder is still wherever you financed it, then there are a few steps that you're gonna need to take, and each state is a little bit different, but we're gonna go over that real quick. So you're gonna first have to contact right now, before you start making changes, or you can't put it on the will because it's not really yours, right? You can't put it in the trust because it's not yours. You don't hold the title. So you're gonna need to now in life call the lien holder and say, I would like to transfer the title to a trust, or to you can't change it to a will, because a will is not an ownership document. A will is just a designation for your wishes. A trust is an ownership document. So say that you're choosing a trust and you want to transfer your boat title, your RV title, your motorcycle title to the trust, and it's still with the lien holder. Contact the lien holder, number one. Ask them if they allow that to happen. If they say yes, then what you want to do is you change that, but then you're going to need to also use caution when it comes time for, if you have not paid yet, the person that inherits that asset will have to is liable for the remaining balance of that asset. So whoever is inheriting is responsible to pay the remainder. Otherwise, they can come and confiscate that anyways. Let's say that you leave your boat for your son, but you haven't paid for it yet. If you pass away and your son inherits, just because they have the title, it means that they still are liable for that asset, the balance of that bill. If they don't pay, the company has the right to come and take it away. So you need to make sure that the beneficiary has funds to be able to pay that off if they're not capable to do so. Otherwise, they'll lose the asset regardless. So then you paid money to transfer the ownership to the trust, but the person is not going to inherit it anyways. Okay, so you want to make sure that you either leave money in your estate to pay off that loan, or find out from a beneficiary if they want that asset and if they're capable of paying that off once you're gone. So that's, we are talking about changing the title to assets that are not real estate. Okay, so we're gonna go over to what if you become incapacitated? So you don't pass away, but you want to leave direction to when you're sick. Most of the time, that situation requires that you leave a power of attorney and that you leave a medical directive and a living will all written down. And a will is not as comprehensive as a trust with regards to these three documents. So a living will have details such as your medical wishes. Do I want to keep plugged in? Do I want a ventilator? Do I want to be resuscitated? Do I want what do I and send what do you want to happen to you if you go to the hospital for a long period of time? And then life support and resuscitation. So those are the things that you are going to define in a piece of paper, sign it, witnesses, notarize it. So if it comes to that point, your family, the people that love you the most, are dealing with the fact that you are going through that experience. So they're mourning with you, they're worried about you, they have to make decisions. Make it easy for them. Tell them what you want in order for you not to have to put that extra burden on them. Express to them what you want, put it on paper, sit down with your family and say, if something happens to me in this way, this is what I would like to have done, because then they can work with the medical staff to do exactly what you asked. They don't have to sit down and try to, one child might want something completely opposite on the other child, and now they're fighting instead of taking care of you. So write that down. Have a medical will, a living will put together. Medical power of attorney and healthcare proxy would be the person that is the final say when it comes to are you an organ donor? Do you want to pull the plugs? Do I need to transfer facilities? I authorize a transplant, things of the such. So a medical power of attorney is going to be the person that's going to be the person that's going to take decisions on your behalf when you cannot sign for anything. And a durable power of attorney, which is also included in a trust, is the person that's making financial decisions for you. So you need to pull out funds from an investment account to pay for, I don't know, an operation. You need to close an account. You need to take out investments in order for you to pay for a hospital bill, whatever. The durable power of attorney is going to be the person that you define, and you give them special powers to be able to access your accounts, use your money, and make your financial decisions. Let's say that you have a stroke and you lose an opportunity to be able to talk or to use on you can operate mentally. That durable power of attorney will be the person that's going to be the person making sure that your bills are paid, the nurses are coming, your mortgage is paid, there's food in the house, all that stuff. So that is included in a trust. A will, not every will has those documents, but every trust will include that. So what happens if I forget something, right? If I want something and then I forget to put in the trust? If you are, in the case of my client, that you wrote down on an envelope, or you wrote down, or you, as long as you wrote it down and there's witnesses there, that can be included, added on to the will, or to the trust, I'm sorry. And the trust also includes a document that's called a pour over will. A pour over will is a document that says anything that I have decided to do with my assets after I concluded the trust will be accepted. So let's say that I've made my trust, I closed it out, I funded it, I notarized it, and then next week I purchased a house. In between my funding this house into a trust, I pass away, or have an accident and I can't make decisions on my behalf, that house automatically goes into the trust because it's included in the pour over will. So that's another beautiful asset and part of the trust that helps your assets be added onto the trust without you going through that process. So those are the documents that are in the trust. I'm gonna, I have 4 more minutes over here, so we're gonna be on time and we're not taking over your time. So let's say that you already have a will or you already have a trust, but it's been 5-10 years. And in between then your children have grown, you have added people to your family, your children have married, you sold and purchased some property, you opened and closed bank accounts. Have you recently updated your trust or your will? And the services that we provide, once you get a will or a trust done with us, we do a yearly checkup on our clients. The reason we do so is because most of the time we forget the will, we forget the trust. We get the document, we notarize it, we witness it, and we put it in our safe, right? Our financial advisor has it, but we don't update it. And so if you have lost a spouse, if you have moved to another state, if you have purchased more property, whatever it is, once a year is a great reminder to update that trust, that will. If you don't use our services, maybe on your birthday is the day that you're going to decide to update your will. Open it up, check to make sure that all your accounts are updated, accurate. Make sure that you still want those beneficiaries to continue to be those beneficiaries. If you want to add or delete things from that trust, take some time once a year to do so. Okay, so that's you. If you have an outdated will or trust, pick a date that is memorable to you, that you can go back to it and get that done. Okay, so let me talk to you a little bit about the types of titles. People hold title to their real estate in different ways. There are different types of titles that you can hold your real estate property. And so what happens if you pass away but your spouse doesn't, or vice versa, your spouse passes away, both of you have title. There's several types of titles. Let's talk about the married couples first. There's a few ways that you can hold title. One is called joint title with let me pull it up over here so I don't mess it up. So in case something happens to you, joint tenancy with rights of survivorship. So what happens is both of you own it 50-50, and one spouse passes away, automatically the house belongs to the surviving spouse. So no problem. This avoids probate. And in this case, if you are alive and you want to sell, both of you need to sign it. So joint tenancy with rights to survivorship, it says it all, right? So you're joint tenant, but if you want to sell it, both of you have to agree. So let's say in this case, I have a client right now that's do this. They're married, but they're separated. They don't want to go through the divorce yet, but they're no longer happy with each other. So they're living at different places. One wants to sell, the one doesn't. Well, the one that doesn't want to sell it won't sell it. And so they have joint tenancy with rights to survivorship. Although they're no longer living in the same house, one wants to sell the other one, the house is not going to get sold because the one that doesn't want to sell it won't sign the paper to sell it. So that is the catch for this type of title ownership. The second one is tenancy by entirety. And only in some states you have that type of title. In this case, both of you are 50-50, but the spouses are treated as one legal entity. Let's say that I have a credit card that is in my name only, and my husband has a credit card that is in his name only, and I default on a credit card and the creditor comes for me. They cannot take my house because the house is also owned by my husband, who is not liable for that debt. So tenancy by entirety is, my opinion, the best kind of title for a couple that do a lot of business, because one is liable, the other one is not. Their primary residence is safe from creditors or from any kind of legal entity. Let's say that somebody decides to sue me because my husband is separate on that business, the house is intact, the house is safe. So tenancy by entirety is a type of title that you want to consider, but it's not available in every state of the United States. In Florida, it is. So that's how we hold out our title here in our house. Tenants in common are, I'm going to talk about only these two types of title, because both of them allow the property to go to the spouse, right? So if we're married and we hold a house and one spouse dies, the other one inherits the house. Now, what happens when this second one stays alive? So the step up option is available. So let's say that you guys buy the house when you first get married in 1900, and the house was 100,000, and now the house is worth 500,000. When the first spouse passes away, the second spouse buys the house at 500,000. So they don't have to pay for the $400,000 gain that happened within those years that you lived in that house. So when you now want to sell the house, you're going to sell the house at 400,000 that is worth right now. It's going to require an appraisal to make sure that the house is appraised properly at the passing of the first spouse. But now your house is going to start at 400,000 when you're going to sell it eventually, if you sell it. If you're going to let your children inherit the house, then it's going to step up when they inherit as well. So that's the beauty of owning a house with two people. Now, if the last spouse stays and they don't have a trust, then the children are going to inherit that through probate, because then the courts have to define that those children really can take that house as their asset. But if you put the house in the trust and nominate your children as successor trustees, the moment you pass away, the house now becomes theirs, because they're just managing the trust just like you're managing the trust. So what is a trust and what is a will in comparison to managing your assets? When you put your assets in a trust, when you transfer the name of the ownership on the title or on the deed of your assets to the trust, this house here, if you go to Zillow and you see who owns this house is owned by the Farrell Family Trust. So I don't own this house. My husband doesn't own this house. Our trust owns the house. The both of us manage the trust. So we manage those assets, but it's owned by the trust. But let's say that we are no longer here, like the Coldplay CEO guy. He's no longer there, right? Who's gonna manage that company? Who's managing our trust? If myself and my husband are not here, our children are managing our trust. So now they can do whatever they want. They can sell it. They can keep the house as long we don't hold title because we haven't paid for it yet. So they need to be able to keep paying the mortgage payments in order for them to continue owning the house. If they don't want to make the mortgage payments, the three of them can sell the house immediately because they have ownership. They are managing the trust and the trust owns it. So that's the beauty of having a trust. It gives access to your assets immediately. Your beneficiaries can do stuff immediately at your passing instead of waiting for a probate that is very costly and most of the time is going to take away your assets, take away a portion of the value of your assets because you didn't define how you want that transferred or where you want that transferred, and you didn't take the time to prepare those documents and pay for it while you're living. So at 7:05, I wanted to make sure that I recorded this and had this all as fast as I could possibly get in a half an hour there. But I hope that it helps you kind of understand the importance of putting this on paper, on getting this done. If you are interested in more information, you can go to annafarrell.com and you can see all my content there. You can ask a question, you can leave a comment, you can send a message. You can go to any of my social media, Instagram, Facebook, X. You can go to TikTok, any of those. You can get in touch with me. My phone number is all over the place. Send me a message and I would be so glad to help you figure that out. At the end of this event on Facebook, I'm going to leave you a link to where you can find more information for you to start that process of working in a trust or working a will into your retirement planning and to your financial planning. I strongly suggest that you do that. I don't feel myself old. I feel myself young. I have lots and lots of years to live, but I don't want to be worried about if anything happens to me now or in the future. And I don't want to leave my children making decisions that I can make for myself. And I don't want to burden them with those decisions when I can make that much easier for them. So I encourage you to think about that. And if that's you, I want you to get in touch with us, and our offices will take very great care of you. Hope you have a great night. Take care.